Psychology in the stock market. How does this work? Well, I don't mean to nerd out on you guys a little bit, but I personally think this is one of the coolest concepts there are. I am super happy to be able to do a lesson on psychology because psychology is essentially giving you a superpower. Psychology is going to be understanding the mind and understanding how other traders' minds work. And if we can understand how other traders' minds work, we're going to be able to make a lot of money. Because at the end of the day, what makes stocks go up? People buying stocks. What makes stocks go down? People being fearful or getting out of that play. They're scared of the play and they get out. So let's try to break this down into a couple different concepts so that you guys can start thinking differently about the stock market. Because right now I know how a lot of traders think. A lot of traders see again these graphs and they just say, okay, what graph is going to make me the most money? How am I going to become a millionaire? What can I buy in? And what if one spikes up to $100,000? I know we all want to just turn $2,000 into $1 million. But let's start thinking about how that's actually possible and how other traders in the market can be able to help benefit us in our profit taking. So let's bring it all down. What do we have here? What is psychology? Psychology is the scientific study of the human mind and its functions, especially those affecting behavior in a given context. So what we're actually going to be studying in this lesson is the mind and how it works through trading. How does someone change during their trading than how they would be, let's say, in their normal day life? Don't you guys act differently? Don't you guys have different emotions? Aren't you guys a different person when you guys are trading? So if we can understand how you're thinking, that's going to be very beneficial. Now, what is sociology? Sociology is the study of society and how humans act in groups. Sociology is a social science. So now we have how are people going to act in a certain group, aka certain group of traders, all trading the stock market, and how are they thinking about that? What I want you guys to start doing from now on is when you guys wake up and you guys come to your computer chair and you sit down, I want you to start asking yourself this very important question. Not what am I going to trade today? It's what is everyone else going to trade today? If my favorite stock out there is XYZ and no one else in the world likes XYZ, why the heck is it your favorite stock? Your favorite stock should be the stock that everyone else likes or the stock that everyone else is about to like, because that's where the movement's going to be. Without people buying, without people selling, the stock isn't moving. There's no volatility. Don't we want to be buying stocks that are moving up or moving down because that's where we can actually make money? So many people get so locked in and have so much bias towards one play. They say to themselves, I like this play, and they just want to trade that stock. Deck, I love AMC. I'm never leaving AMC no matter what. Traders, the thing is, if AMC is not moving, why would we trade that? If AMC has been falling for the last 4 years, why would we trade that? You know, so many people get hooked to a play. Don't get hooked to a play. Be a player. Go around. So what we have here is how do these two mix? Stocks move from us. If a trader buys a stock, the stock moves up. If a trader sells a stock, the stock moves down. It's not what are you going to trade today? It's what everyone else is going to trade today. Because when everyone else is trading stocks, that's what brings in volume. And volume leads to hype, momentum, FOMO, emotions. What's FOMO? The fear of missing out. What's emotions? Again, getting all caught up and saying to yourself, oh wow, I like this. Oh, I don't like this. When we have emotions in the stock market, that's when we have some of the biggest runs and the biggest rips. We always tell you, and just like everyone tells you, don't be emotional. But how hard is that to do? And especially when one person's emotional, another person's emotional, and another person's emotional. Let me ask you guys this question. How many people have ever watched me on live stream get fired up and then you got fired up? How many times have I ever said, hey, it's really boring this day, and then you start getting a little bit more bored on this day? Emotions are contagious, and especially when we see them and feel them in the market. On Wall Street, we see again the stock market crashing, CNBC, everyone run for your life, it's scary, everything's falling apart. That emotion of fear continues on, and that's what builds momentum and can lead towards profit. So if we can take advantage of, again, emotion, and we can understand how everyone's going to react in a certain setting to certain news, we could be able to benefit off that. So how I always like to break down the majority of traders in the stock market is I call it the mob. The mob is what I call the majority of buyers. So the way that I think of my stock trades, especially when I'm trading smaller cap plays, is I just try to think about it as an easy understanding. The mob is going to be that group of traders that really don't know what's going on, right? A lot of new traders that are essentially just following what everyone else is doing. And I think at some point in our career, we were all part of the mob, and you still may be part of the mob, but your goal is to get out of the mob. Now, what's the mob? The mob to me is like these guys. In Finding Nemo, there's basically a huge group of seagulls, and these group of seagulls are all just saying, mine, 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 and they all just flock together. They all fight over the same fish. Then all of a sudden, they all sit around and just sit around and do nothing and nothing and nothing until again, they see another fish and they all go together. They basically just clueless, mindless birds that are, again, just trying to just survive. And that's what the mob is in my eye. If there's 100 people in the stock market, there's probably 80 of them that are in the mob, just essentially saying to themselves, hey, whatever everyone else is buying, I want to buy. I want to become a millionaire. How do I become a millionaire? Are you a millionaire? I want to do whatever you do. That's what the mob is, okay? So let's try to break down and actually see where the mob is and how can we get out of the mob. So this is one of my favorite charts that I go over. This is one of my favorite technical charts that I break down because it really helps us understand on how we can trade and how we can become better. So let's say there's 100% of traders, 100 traders in the stock market. How can you avoid being part of the mob? Well, we're going to say probably 2% of traders right here are going to be the early swing trader. That means they maybe got in super early. They've been researching a stock, have been studying their upcoming events. They have jumped in a week, 2 weeks, 3 weeks before everyone else has jumped in. For some reason or another, they had an edge. They figured something out. It's very difficult to be in a stock before it comes out with news. It's very difficult to say to yourself, oh, I want to jump in this week. It's going to go on a very big spike next week. It's hard to predict that. And that's why it's very tough to be in that very exclusive club. But I'm going to say the majority of full-time traders are either in 2 to maybe 3 different spots. That's going to be the breakout traders, the shorters, or the dip buyers. Let's say if you are not in that early swing trade group, you're probably in that early breakout group. And that early breakout group is going to be probably about 15% of traders. These are people that have done the research. These are people that know what to look for, know what press releases are good, know what stocks are going to be on their minds, and they can start getting in the moment they see momentum start taking on off. So this is pretty interesting because we can already see the people who have done the work, the people that have research, the people that are confident enough to buy in early. Those are the ones that make money. We have the 2% early swing traders, and then we have the 15% breakout trader. But if you are the person that raises your hand when I ask, does it seem like every time you buy a stock, it does the opposite direction? Does it seem like no matter what you do, it goes the opposite way? Hey, Deck, it doesn't matter. If I buy a stock, it does the opposite. If I buy, it goes down. If I go down, it goes up. No matter what I do, it's like someone's watching me. You're part of the mob right now. And I'm not here to offend you, but you're part of the mob because what you are waiting for is you are waiting for the early swing traders to get in. The stock moves up a little. You are waiting for the breakout traders, the stock to start going up even higher. And now you finally feel confident. You finally feel confident now because the stock has already gone on a very big spike. So guess what? You end up buying here after it has already gone on a very big spike. You are buying at the very tippity top. And you know what? At the tippity top, this is where swing traders say, hey, I'm up a ton of money right now. I'm taking my profit. And the breakout traders are going to say, yeah, I'm pretty good with my profit. I made a ton right here. And they take their profit. And look who's losing. The person who's losing the most is the mob, who again, all now sells down here. They say to themselves, what the heck? I waited for a big time spike. I saw a big time spike. Then when I buy in on it, it has to go the opposite way. Of course it does. Well, because you didn't get in early. You didn't get in when it first started breaking on out. You don't have confidence in your trading yet. This is not, again, supposed to put you on down. It's supposed to open up your eyes. You know why, again, you are end up losing? Because you're waiting for it to go higher and higher and higher and higher. And now you're like, yes, it's breaking out. It's time for me to buy in. This is essentially the same exact thing. Imagine if you were scared of flying, okay? You're scared to jump on an airplane. And you go to the airport and you say, that's my airplane? You say, yep, that's your airplane. Get in on it. You say, I'm too scared. I want to make sure it works. Have it fly down to Florida. And they're like, well, it's going down to Florida. Yeah, just have it fly down. And then when it lands in Florida, they say, yep, they landed in Florida. The plane you just missed. Now I want to get in. Well, now it's in Florida. It's gone. You missed the plane. You have to trust the plane. You have to trust your game plan. You can't wait for it to leave and then want to get in to know it's safe. The thing is, you will never have 100% certainty in stock trading. You have to, again, go with the facts. You have to go with the odds. Why do you guys jump into a 200,000 pound metal aircraft in the air? Because the stats and the facts are you have less than 1% chance of ever getting into a plane accident. You're going to be fine. Same exact thing with, again, stock trading. Stock trading, you make your odds. If you, again, do your early research, you're going to say to yourself, hey, I got an 80-20 here. Hey, I'm a breakout trader. I have a 90% chance of success, a 10% chance of loss. When you're buying at the very top, you're saying to yourself, I don't know, I'm just buying it because everyone else is buying it. I'm a 40-70, 40% chance of winning, 70% chance of losing. We have to have more faith in our trades because putting us in the mob is all because we're relying on our eyes and waiting till it already makes the move for our confidence to actually appear. We have to have confidence before it happens. And that's why you're always, again, selling at the absolute bottom. So who's taking advantage of you? The thing is, team, yes, in the stock market, there's always going to be a person who loses. When you're selling it, you're selling to someone else out there in the world. There's always going to be people who are going to be buying at the tippity top. I don't want them to buy at the tippity top. I'm trying to help you not to get in at the tippity top. So guess what usually happens here? Who's here has ever been on this concept? Who here has ever seen a big spike happen? It's spiking, it's spiking, it's spiking, it's spiking. We have our 2% or 15% in. Now again, you finally feel confident. So you get that nice big pop on up. These guys start locking in their profits, and then you end up losing. You end up losing, you end up losing. These guys end up winning. And now again, you get out. And not only, let's say, do you get out right here, right? You get out right here, but you say to yourself, hey, well, now the stock's dumping. Let me go ahead and do a short. And then you go ahead and do a short. And then guess what happened? Well, now it starts moving its way back on up. And this is when you just throw your mouse across the board and you just say to yourself, this is ridiculous. Every time I get in on this play, I lose. If you are late to the game, you will constantly lose. And this is like, sometimes I see this in chat and I see people say, Deck, why would you ever buy in when the stock market's falling? Why would you ever do a put contract when the stock market's rising? Because stock trading success is made from reversal, not by buying after it's already moved. So for instance, let's just look right above me here. If I see a stock ever go up, 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 sometimes I say out loud, I'll say, hey guys, get ready for a possible put contract. And then I'll have new traders say, no way. Are you crazy, Deck? I'm not going for a put contract. I'm not going for a short. Are you nuts? And I say, why? And you say, well, because look how fast it's going on up. Well, guess what? That means a lot of people are going to take profit. So I'm going to enter right here on a put contract. You're going to enter right here on a call contract. And then guess what happens? We start seeing this start happen. And then the same process happens. Hey guys, get ready for a call contract. What? Are you kidding me, Deck? No way. I'm not buying a falling knife. I'm not buying this. We hear these terms and again, we want to start using them. I'm not buying a falling knife. All right, that's fine. You can, if you want to go with it, you can. So I end up buying again down low, right? I'll end up buying down here. And you say, I'm going for the put contract. You start doing a put contract right here. And then guess what? We start getting a bounce back on up. And it's like some people just never learn the fact that if you just constantly chase these, you will constantly lose. So let's think about this here for a second, team. There's 100 traders in the stock market. Look at all the places you can win. You can win if you do your research and you get in early. You can win if you are watching a play and you see a breakout and you pull the trigger right away. You can win if you miss the spike. If you miss the spike, you can go ahead and wait for the top and then short it. If you're a person that always loses, wait for it to go on up and then do a short. And then if you miss all of this, you can go ahead and just wait for a dip buy and enter where it started spiking. But you know what's wild? You know what's crazy? 70% of people are just going to keep buying at top or keep buying at bottoms or keep shorting at bottoms over and over and over again because that's where they feel confident and it never changes. So you have to take your loss as a lesson here and really be able to gain this. And I hope you guys can realize again as a psychological aspect on how people are successful and how people aren't successful. So how do I get into the top 20%, Deck? How do I become again a breakout trader or a shorter or a dip buy? Well, how do we do this, guys? We have so many different areas. It just comes down to actually putting in the work. That's all it is. People are always asking me, Deck, how do you do this? How do you do this? Everyone wants the answers given to you. Just study, have experience, paper trade. I've gone over this before. I don't really want to go over it again, but I have so many people DM me, email me, say, Deck, I've been trying to do this and it just won't work out for me. How long have you been doing it for? About a month now. Please stop. You're saying, you haven't reached your success in a month, right? Well, Deck, I've been really working hard. All right, how long did you paper trade for? Well, I didn't paper trade. I wanted, I go to real money right away. Okay, how many video library lessons have you watched? I watched a few. I watched a couple. Okay, do you record yourself live trading so you can rewatch it? I haven't done that yet. It's like coming to me and being like, hey, Deck, I want to have a wonderful summer body. It's a month in. I don't have a wonderful summer body. Okay, what's your diet? Well, I like having ice cream and donuts. I have a lot of trouble giving that up. Okay, how often do you lift? Do you go 5 days a week? Well, I've been going like 1 day a week, and then sometimes like I have work and business, so that comes on up. Okay, are we doing any cardio? I hate cardio, Deck. I don't want to do that. And it's like we're shocked we don't have results. I will tell every single person right now, this is the formula for success. You can take it, you cannot take it, whatever you want. If you want to be successful in the stock market, all you have to do is number one, you are going to paper trade. You are going to paper trade with crazy large amounts of money. Have fun with it. Go crazy, go nuts, have fun. But then once you start kind of going through that phase of, all right, let me get more serious, grow a paper trading account from what you have in real life. Don't start a paper trading account with $200,000. You don't have that in real life. Paper trade with, again, what you have in real life and get it up to a certain goal. 2,000 to 25,000, 10,000 to 50,000. If you can't do it on a paper trading account, you definitely can't do it with real money. So you should be able to do that once. If you want to do it twice, 3 times, go for it and be able to do it and take it seriously. That doesn't mean buy a stock and go walk your dog if that means you're not going to do that in real life. If you're going to buy a stock and sit in front of your computer, you buy a stock and sit in front of your computer when you're paper trading. You do that for at least 6 to 12 months most likely. That's not going to build up your emotions. That's going to build up experience. Then after you build up your experience, that's when you start trading real money. And that's when emotions are going to take over. Now, you don't go ahead and start trading real money with large shares right away. You go back to, again, only using 1 share, 5 shares, 10 shares, 1 contract, 2 contracts, 5 contracts, and you build up tolerance. Just like we're staying with, of course, lifting, we don't just go on the bench and start repping out 300 pounds. We start with the bar. Then again, after a month, we go ahead and add 10. And then we go ahead and add 25s and 45s over time to build up our muscular tolerance. Same exact thing with our trading and emotions. We don't go just from 0 to 100. I can, again, watch a YouTube video on what to eat, how to have proper form, then go to the gym. Doesn't mean I can lift 300 pounds. I can watch, again, a trading video on, okay, what to do right, how to, again, trade right. Doesn't mean I'm going to be able to control my emotions. It's the same exact thing. Then lastly, what do we need to be doing? Every single person should be buying a webcam. You go to Amazon.com, you buy a webcam, you record yourself trade. Go to OBS.com. OBS, you download the free software, you record your screen, you record your face, and you watch yourself trade. You will be humiliated. You will be embarrassed when you watch yourself later that night or the next day when you are saying, what am I doing? I am randomly clicking that buy button, I'm randomly clicking that sell button, and I am, again, just hoping that it turns out to me. You are going to watch that person and say, man, I don't know what the heck I'm doing. And it's going to be a little embarrassing, but that's okay. You know why? Because it's helping you become better. Don't do it without a webcam because you can't see your face. You can't see your emotions. You can't see what you're thinking. So you want to be able to see it all. And of course, record your stream. So what have we accomplished here? We are, again, understanding if we want to get out of our mob, we have to study, we have to paper trade, we have to watch the video library lessons, we have to, again, build up our emotional tolerance. And then, of course, on top of that, we have to rewatch our trading. We have to, again, be able to learn from our mistakes so that we become better. I've said it a million times, guys, but if we want to be a lawyer, we go to school for 8 years. If we want to become a doctor, we have to go to school for 8 years. If we want to be in the NFL, we probably start playing football in 7th grade and we, again, work our butts off for 12 years till we get to the NFL, through middle school, through high school, through college. Oh, I want to be a stock trader and become a millionaire. Deck, it hasn't been working out for me for a month. It's like, guys, stop your complaining. You know, put in some work, have some pride. You know what I'm saying, guys? So let's think about this. Different ways to find the mob. Deck, how can we find where that 80% of people are always going to go? And how can I take advantage of that? Well, if I know that 80% of people are going to look for the pre-market gap up of the morning, I could either look to go ahead and buy in right away and take profits, or I could wait for that reversal, aka shorting pre-market top gainer. That's what we do nearly every single day. That's all I did 2021, made $551,000. We can, again, short top gainers or look for previous day top gainers. And it's really about just understanding where is the hype. Remember, the mob is just going to be that group of traders on social media trying to become a millionaire and just searching and just following what everyone else is doing. Don't have their own mind of their own, right? And that's what I want you guys to step out of. And if you guys are in the mob right now, that's okay. I was in the mob before as well, right? I was in the mob before. We were all in the mob at one point, but we got to break out of it. It's like you guys ever see the Matrix? We're trying to wake up, right? Come on, Neo, get out of there, buddy. So I'm trying to wake you up. I am your Morpheus. And ladies and gentlemen, you can either take this red pill or you can take this blue pill. If you take this blue pill, you will continue to stay in the mob and you can continue losing all your money until you have nothing left and you can go back to your life. Or you take this red pill and we can go down this rabbit hole and see how far it goes. So understand how the mob works different in market conditions. Some days the mob will be stronger than others. Understand the mindset behind traders. Market conditions are like the weather. So on certain days, the mob is going to be stronger. When we have days where the market's crashing, there's a lot of fear in the market. When we have days that the market's spiking and everyone's going crazy, there's a lot of excitement in the market. So take advantage of those emotions. When I see everyone in chat saying, boring, boring day, what do you think I do all automatic? Tone down my contract. Hey, over 3,000 people are saying boring. Probably, again, the majority of people are. Hey guys, I may not trade today. Hey guys, I might keep it, a little bit tighter today. Just being here in this community gives us an idea of how we should be trading. If every single person is ripping their t-shirt, not wearing, again, underwear, having a good time, just going crazy, well, then again, we start toning things on up a little bit because we understand the emotions and what could be coming out of it. So what I want you guys to really understand about this entire lesson here that we've gone over today is I want you guys to start kind of thinking about trading as in what is everyone else going to do. I want you guys to start thinking about trading as let me not be an individual here. Let me think about how the group of, again, Wall Street, the group of traders, the group of option traders, what are they thinking? And how can I profit off their thoughts? How can I, again, say, is everyone super excited? Okay, let's lean towards a buy. Or is everyone super scared? Let's lean towards a sell-off. So think about where we're at. Make sure you guys, again, start becoming better traders and really think about this chart a lot. Think about whenever you guys are about to make that next possible mistake. Say, am I in that 70% right now? Or should I wait to be in that 10%? Should I wait to be in that 3%? Should I wait to be in that 15%? Should I wait for that 2%? Let me avoid that 70%. We are not in that 70%. All right? You guys got me? We good? Awesome, awesome work.